Okay, we can't waste any time, obviously. Huge reversal from this morning. Amazing day after the big announcement. Looking at the Dow all over the place, but we've hit big numbers. Some of them that have been we have been targeting for weeks. Literally, were hit 3 hours ago, 2 hours ago, I would say, and now you're reversing your huge pivot off a lot of these. So let's pay attention. Let's get to it. Big shout out. The winner today, first person that got into the chat and actually typed V3 was Pat M. So, Pat, you need to go over to the Discord and contact Miss Stephanie. You do that by becoming a basic member. Go to harmonictrader.com, and then the Discord link for that active community is towards the bottom of the page. Just click there and then contact Miss Stephanie or reach out to one of the mods. Pat M. We'll give away one or two more today. Big shout out to the chat. Scotty, what's going on? D, hey, what's happening? Andres, Laser D, Bishal, Pat M, congratulations. Stupid Head, Nick Halden, what's up? Great to see everybody. Thanks. Big numbers. I think going back through the key markets is critical, important. Let's look at these individual players here. Let's look at the stuff like Tesla. All right, we've been looking at that 208 level. What's 208? It is the weekly, sorry, get back here. It's the weekly bat pattern. All the way back down to the 886. Hit this morning. 208.30 was the low. 208.79 was the 886. So that has hit. What do we do? Any confirmation? I mean, this is big. Down here, where's the daily? Let's break it down into the smaller time frame. So nothing, no HSI on the daily, but RSI and amplified are starting to turn a little bit. Okay, not out of the zone yet, but it still will need a little more time. I think this is a structural reaction off of those big levels. Here's the other one. Take a look at Microsoft. Remember 221? So this hop level on the daily, and stick to the daily time frame. There you go. 221.75. Okay, today's low, 219.13. Looking like that. No confirmation down there. That's just a hop rejection. Type 1, bang, comes to the type 2. Type 2 completes, and now what are we going to do? Plenty of time for this thing to try to give us some other kind of confirmation. By definition, for Microsoft, your confirmation came here. So what's this last ditch down? It should be exactly that. So the larger zone for Microsoft is basically 235 to 221. So you're technically still in that zone. These are big candles, no doubt. Big bullish engulfing. Would love to see big bullish engulfing 3-day candles to at least alleviate the pain, folks. So that this isn't a total collapse, because despite this huge reversal, the larger consequences of what's happening in, say, the Nasdaq or S&P or under these levels on the Dow are much more severe. There's this other second leg that has taken shape is not, it could be just getting started, and if it really does wash out, there's some devastating consequences lower. You need to see a candle like today, and you need to see a few more. I've been saying all along, one bullish candle is really a starting point. So now you hit numbers, stuff on Microsoft, stuff on Tesla, big type 2 numbers that we have been talking about for weeks, if not months, are hitting exactly and then reversing. Okay, that's a start. That's definitely a start, but there's more to it. Here are the diamonds, because the diamonds, a lot of those ETFs, doing the same thing. Remember, the diamonds are a type 2. Might explain why you're getting response off the industrials. That kind of led this market out of the low this morning, which is unusual. That is unusual to see the diamonds, see the Dow in general lead a rally. But since the June low, your real nice deep crab come back for the type 2. We've talked about this in many sessions where this pattern has to be it. It came back for the retest. You're trying to get to 309. I mean, with today's down action this morning, when you were down 400, 500, that was looking like a total collapse. And it still is under 283, 284. That would definitely wash it out. I think a candle like today even reinforces the whole concept of these current lows. Like, let's say 3 days from now we roll over and we start going under today's low with this kind of action. It's just, that's another one and done day. Not a bad comment. Yeah, Vlad saying maybe we give it up by the end of the day. Maybe. This is just one day, but you've hit a lot of numbers in an ideal fashion. I mean, look at what we've done with Tesla and Microsoft. Spot on. Okay, and those were, a clear type 2 return situations on the retest. Here's Apple. Apple did not get to the 131.86. I would have loved if that would have hit too. That would have been 3 of our 3 stocks that we've been monitoring as critical markets that really needed to complete their retests by definition. So if the market was going to turn around, you would want to see these type 2 situations complete, confirm, and start to move in the other direction to help the market. Otherwise, if you go straight through, that's where you just continue to fail. You're down to a handful of stocks. I mean, I don't think it's probably less than 100 stocks that are holding up most of the market. There's a lot of great statistics on, percentage of stocks under 50-day, 200-day moving averages, and then even those that are, close to 52-week new lows. A lot of market internal dynamics are incredibly weak. So today's one-off rally, not a biggie. And yeah, we could probably, Nasdaq's now up 100. We were just up 200. That could go back to even by the time we're done this discussion today, by the time we're done the live stream today. A couple other ones that I think are real interesting. Let's just keep jumping around. This has been a week of looking at specific markets, but things that are really relevant. Check out UNG. Okay, trying to hold up there at 20, but actually we want to look at Boyle. Okay, Boyle has just parked itself at that 48 level. So nat gas and crude oil, here's nat gas, seem to try to be stabilizing a little bit, which is, interesting for energy in general. Nat gas is just sitting on this daily HSI level around 650, 660. Crude oil. Actually, let me go show. Let's look at the USO. And here's the UK oil chart. Actually, UK oil chart's really interesting. Nice Gartley here at about $89. That's Brent. Just looking for possible developments of okay, is crude oil going to sell all the way down to that 75 level or 65 level we've talked about in light sweet? Still nothing, really not doing much other than reactions off of the current lows. Needs more time. Here's the UNG as well. And UNG is more about this crab pattern. A bunch of those are getting close to major targets. Energy, if it's going to hit some kind of resolution, I think it's going to be pretty soon. Key spots. Another key, probably the most important markets, other than the individual stocks, something to keep a real close eye on every day now. I think every day you got to know where the 2-year and the 10-year are. The 10-year yield has been trying to budge above the 4% level. And we know this situation, okay? So there you go. You have this bat pattern with the hop level around 366. And you're overspilling that 366 up to 4%. And take a look at your HSI. Are we going to stall up here? I mean, you did break into a new weekly high, and then you got rejected. I think it was today. It's one of the reasons why you're seeing the markets kind of, yeah, here you go. You had a big reaction, and now you're just rolling over. Not a biggie here on the 10-year. That's why you got the sell-off. But I'm not in terms of that being some kind of top just because it's 4%. Not until this weekly chart resolves itself, and this has been the one we've followed. Really, since April, we talked about the 366 level. Now you're 4%, and you just need indicators to roll over to put some kind of cap on this move. This is why the markets are selling off. This is the 2-year chart is even worse. The 2-year chart is the reason why you're getting the massive failure of the June lows and acceleration to retest much deeper levels. That not only that, but the fact that those are still inverted to the degree that they are. So that's have we seen a single bearish candle weekly? Not for 2 months in a lot of cases. And daily candles, any kind of bearish is just a pause. Yeah, look at that. That's a really strong move. You do have this check back on the 2-year yield at around 435. But I've got a little something to share on checkbacks and HSI that I think will help. One of the things we see with the really strong moves with the checkbacks are those that are in agreement. Again, you're looking for, say, a bearish check back. Let's say there, okay? You formed the resistance at around 435 here on the 2-year yield. And this can be any market. This is how we look at Harmonic Strength Index. It'll trigger. We look for some retest. After it does, okay, it's still going to be a few bars until any kind of major result can be expressed from that check back. You need to see 1, maybe 2 bearish candles. If you don't have a bearish candle on your check back, and you could even just wait, and much like we wait for the close of Harmonic Strength Index, you can wait for the close of the check back level and then wait for, say, 2 agreement bars. Bearish candle, give me 2 individual bearish candles that say, all right, this thing's starting to stall or roll over. You're not there yet. That's a week, that's a daily. We'll take this into literally, I think, Monday. You're lucky this thing is rallying today. If this was not, if the response was going to stay what it was earlier, like Dow down 500, Nasdaq down 200, 300. Again, that's, I would have said, today, tomorrow, Monday, you drop a couple thousand. and maybe not get to the full target, but you do the next flush of the second leg. I want to show you that. I want to show that harmonic strength index strategy. I think it's going to help people to kind of weed out when certain HSI signals are actually yielding a larger move, and then especially in the zones. Here's a 5-minute. Let's go like a 30-second chart, just so I want to show this. We're back on NQ here, and I still think I agree with those that were saying this could roll back over. I'm looking for an active short up here. You know, you were almost 11,100, almost 11,120. We're back at 11,000. These kind of days are great days because of the movement. You can get 50, 100-point swings on NQ quite easily. But here's something where with HSI, that a perfect example right now on the 30-second chart. We have a deep crab. Great day trade. You're looking for a day trade up to 970, but you just triggered. All right, you have a pattern, you have your trigger, and there's the check back, but it's bearish. So why not wait for 2 bullish candles? So we need to see 1, 2 bullish candles. Where are they happening? So instead of maybe looking for it exactly right on the check back, let's look at it with the zone. There's the first green after the check back, second green candle. So then more it's like there. You know, now we're looking at that check back where you have at least 1, 2 that agree with you, somewhere around 910, 925 instead of maybe 935. This is a 30-second chart. Let's just sit on this and play this out. So we're in the zone. You have a couple of extra bars, but okay, now I have something and I'm triggering for 970. So let's see how this plays out. All right, so our entry around 25, which is lower than, say, the check back, which was around, the second candle, the close of that was around 22. The check back's around 25. But you have a greater development after that second green candle than, say, back right immediately at the check back. That's something I've been looking at a lot, especially in the daily charts, 4-hour charts. One of the problems with the failures of the confirmation is that they'll blow right through. So if you're trying to get back, check back on every one and it doesn't stabilize, yeah, you're getting stopped right out. I've seen a lot of people have sent me charts on that. And this might be an idea that kind of tempers that wipe out, check back scenario where it doesn't give you what you need. So, all right, wait for the check back, wait for 1, 2 candles. And we're in a zone. So we're in a big pattern zone, which is the other side of, we're not just looking at this on a singular basis, although it does work, but we're utilizing the pattern structure and targets as the kind of the whole framework for the move. So here we go out of the zone, and our triggers were as low as 22. The initial trigger was 25. And now we're getting to 70. So you're at 50 already. Let's stay with this. And this is a type 1, 30-second. This is, again, a day like today can be great for day trading. Now, okay, so we're a couple minutes progressed into this trade. I wanted to walk through this setup with this HSI technique. All right. So you're already bumping stops. That's the other thing to consider here, where our expectation, now that we have gotten out of the zone and we have confirmation and we have progression, meaning you're continuing a higher pattern of higher highs, higher lows, is that we want to use every individual bar as the stop. And you want to bump those stops as this thing climbs up, trying to go for that target to 970. Clearly, you could go under the terminal bar. You could go, You could even say, all right, underneath this candle, I'm going to stop out and take another shot. But you're that far along where, look, you got the HSI. Yeah, you're probably stopped out now. You're probably stopped out now there, and you come back. Now you're back. You're retesting your, look how fast that happened. Jeez. All right, so you would take another shot. But again, I'm just trying to walk everybody through a thought with these HSI checkbacks. Let's wait for 2 bars. You know, let it form. Here's the pattern completed. Bang, it, check back. So 1, 2 candles. Maybe we get another confirmation there. No confirmation. I'm willing to wait on that. This was a good shot there. On the secondary move, no, nothing there on that secondary move. You might get now you might get the type 2 up to 70. But I really think with that kind of development after the check back, it should happen on that move. This might be some more chop. Think about it. I mean, that's let's try to look at that on a longer term basis. Like, let's check out this Microsoft chart where we are today. Where is this relative to the hop? Where's HSI right now? Nope. That prior check back that happened here. All right, there's the check back, 1, 2 candles there, and then you come all the way back against you in the zone. That means the 221 for this whole scenario, that's it. That has to be the low. It's think of it this way. If this is the area where the confirmation for the whole opportunity is getting illustrated, it's presenting itself, if you will. Okay. This should be almost aberrational the last 2 or 3 days, like an overspill move. And if you can't get above on Microsoft 234, 235, this will roll back over. So today paints a really huge candle, not only for just the individual reversal, but where it's happening. Critical. With Microsoft, again, Tesla, a couple of the others. I'm more in the camp that, look, let's now get perspective, and then Microsoft and the rest, these are all the same. The weekly chart and probably the monthly chart is better to look at because we're talking about such a large support getting violated currently. Here it is. Okay. So here's the breakdown. And if you aren't looking at the monthly charts, I suggest taking a look because it's not only about this breakdown of the recent low. That's around 240. It's probably a lot. It's even clearer on the Nasdaq Composite, but this whole factor, okay, this whole factor that we're just in this pattern of a serial pattern since the end of last year, lower highs, lower lows, or both every month. And you're not stopping just because of a daily type 2. You have more work to do on the monthly time frame. Let me go to, here you go. Here's Nasdaq Composite, and this is pretty much the framework for the ones that haven't completely busted out. That's the other thing. The ones, you've got a lot of big companies that are on the verge of completely busting out. So when I talk about this possibility of, okay, here is the Nasdaq Composite. We know we're trying to take out the low. You're trying to close really under 10,550 on the Nasdaq Composite for the first time in a major way since you made these lows, since these past lows from 2020, to then really trigger the bat action magnet move, from the 50 to the 886. Not to mention you've already set it up. I mean, you've already started this thing of an A to B, C to D phenomenon where this is the second leg and you've broken out of the B point. C to D is now you're halfway down. As a matter of fact, you're halfway through the C to D leg of this M structure. It's it's really close to being a bat. It's it's an ABCD bat at the 886, 7800. Again, all of this just becomes clearer, more attractive for the whole scenario with each bar lower. And that's why I've been saying, okay, the 886 retest failed. We've talked about that last month. Not to mention how dramatic the breakdowns have been. Remember, we've talked about 3-bar reversals. Now, look, how do you feel about the 3-bar reversals and their ability to show us the larger moves, the real nasty breakdowns of go to Nasdaq futures, I think was the chart. That was the exact chart we were talking about of daily. We had 3 of them in the last month, and every one led to just substantial follow through. There you go. Looks like this. Yep. So 3-bar breakdowns are that exact candle right there. Another one there, another one there, and then the third one. I mean, you could even say that was yet another one, and that one. So 5 since August. Everyone giving you another ditch down every time after the candle, after the big candle, and that's what we're doing now. Just completed it. Okay, 10,005. That's a dramatic bump from this morning, but nothing more than, to me, a bear market rally. If this was maybe well above 10.2, 11.2 or something, and we had some massive bullish candle here, and that the wick of this candle could just, if this would be some kind of shakeout, maybe, I'm trying to speculate what if it's a bullish opportunity. What are the possibilities here? And I don't think they're there. If anything, like I said, I'm looking for abilities to short this today. Okay, here's that. Oh, we're back. It came back again to retest the crab pattern. This is on a 20-second chart. I think you get to 75. Let me go back to that 30-second chart. It's a little bit different. There you go. All right. Here's what I'll look for. You probably will get up to the 70. As we were going through a couple of those other markets, you've had a few bumps here. This is a good chart for intraday purposes. It's a 30-second time frame. It shows you how, again, you favor the setups with confirmation, and you take the shot where they come. But if you have these secondary or tertiary retests, they're not as reliable. I mean, you had like this little bump there, and now you're into this, yet another one, not nearly as reliable. And now HSI is probably going to cap that reaction. Keep an eye on that. But I will say this, I would like to see some kind of reaction off of this crab pattern, and then maybe come up to target 1, target 2, maybe towards the end of our session in the next 20 minutes. I'll keep an eye on this, because structurally, I would love to see for today, if I'm looking for a place where this could dump, give me a reaction off the pattern, go between target 1, target 2, and then, as we know, come back for the retest. That return setup can usually be nice for some kind of quick, fast return move. And I would love to see this, somewhere around 10,980 or 11,000 for a quick rejection back to 10.9. And then you just, and fail. I mean, that would be, if you're really looking for this thing to go back to the lows by the end of the day, it would be rejected off of there and then just fail straight on through. Let's see how that sets up. That's a nice pattern though. And I like to look at that 30-second chart. Here's something crazy. You folks know I like the 5-second charts for the futures. And, they'll show those micro patterns, smaller patterns. They'll also show really quick confirmation within those smaller zones. Here's, that same deep crab, but on a 5-second chart. It looks stretched out, doesn't it? I mean, here was, you even had an initial reaction and you ran right into a bearish pattern and then back down to the hop. So you're going to see things on a 5-second chart if you're trading intraday that you're not going to see else otherwise, but might give you some clues to say, hey, the move is not going to happen right now because you just formed a bearish pattern, or you're hitting a target one here at 85 and you got to come back down. Couple more. Yeah. Oh, 3 black crows. That on the daily. Was that on the Nasdaq chart? I think you're referring to. Someone said 3 black crows. Yeah. There are a bunch of nasty combination candlestick patterns that have materialized on this chart. A lot of surprising number of the failing 3 methods. For example, what you get is you get 2 red candles, and you get 3 bars of indecision. This is a falling 3 methods, they call it. You have a red candle, which engulfs the range, and then you get 1, 2, 3, and then you get that last candle, the 5th candle, as yet another engulfing, and that's a continuation. That's one. Your 3 falling crows or 3 red crows, yes, and then some other just typical doji reversal continuation style, or even like this. Here you go. There's a really nice. That's a nice hanging cross, I guess you could call that. I mean, it's simple doji reversal. But all of this price action and the fact that we're spelling out all of these formations is just the fact that the market continues to print not only downtrend, but ugly technicals. Technicals that are not confirming, price action formations that are historically significant in terms of showing you, likelihood of just continued action in this behavior. And then you're getting also this pattern of, you get 5, 6 down days every segment. You get, and then 2-day rest. And that might be what we have here, 6 down days and then 2 days rest. Maybe it's 5 and 2. Consider that. Sure, let's keep moving it. Yeah, let's take a look really quick on. Someone wants to look at currencies. I think that's a good idea because a lot of moving around in the British pound and a few others. Also, Japanese yen did that move. Look, British pound, go way back first. Let's go to quarterly or monthly. Let's say quarterly. Why are we this low? Well, you're all the way back to the 85 lows. Simple retracement stuff is an 88. You're at an 886 right here. That's your key level. You've tested that twice now, and looks like you're gonna see what happens by the end of the month, or by the end of the year, really end of the quarter. But is this just going to be an 886 retracement? 117, trying to put in some kind of support here. I want to watch that. I mean, especially British pound, because if that doesn't hold and then we go into price discovery lower with, just cracking multi-decade lows, these just continue to add on to the extremity of what we're witnessing currently. This is the major markets are starting to fall more, which is putting them in the class of, a top 3 correction in the last 50 years. Currency markets are breaking decade support. I mean, here's Japanese yen, and again, I think now you got to look at 168. Here's that crab pattern. We've talked about this. Really, anything above the 145 level, we said this could really accelerate to unimaginable levels, but not so much unimaginable when you have a clear crab pattern, clear targeting objective, and you're out of the zone. For the first time ever, look, here's the pattern zone. Originally tested back in 1995. 1995. All right, had a reaction but couldn't clear the zone. Came back for a full retest. Now, as a matter of just in the last 2 weeks, 3 weeks, you've popped above that and out of the zone to where you're going to shoot the gap up to target 1. That's 168. So does that say that anything changes in the dollar yen situation soon? No, I don't. Not with this kind of price action. It's tough because we've been looking for a low. You think the markets go down 20 or 25%, you're close to a low. And you still get stuff like this, and you get stuff like the interest rates doing what they're doing. That's why day over day these matter. Stuff like the Japanese yen, stuff like the 2-year yield. 444 currently. So what? You were above 450 earlier today and you backed off, but nothing. I mean, just nothing but strength in that continued move, which conversely then puts the pressure on the markets, and we see that in the currencies. Euro. Okay, here's euro. And this, like the pound, the longer they are under, they start flirting with par, with the $1 level, where then you're back to 1-to-1. If I was amazed, I thought maybe the British pound would get to 1-to-1, and then you'd have the pound, euro, and the dollar basically, get them all linked up within 10%. But I would look at euro saying it's not so much even the $1 the par level at a dollar, but go to your decade low. This is a multi-decade, or call it even a century, harmonic reset for the 21st century, where here in the early 2000s, we were down at 83, and then a massive move to 160, and then a big retest to 91. And that's absolutely what we target. You're in a pause right now after last quarter, but still lower. I mean, nothing that stops this train until you register. Again, that low 90 level. Good, HSI is working. But take a look at HSI. We know that until HSI, and this is a weekly, would need a couple of bars, 2 or 3 bars, 2 or 3 weeks to get out of that zone. And you're a -16, folks. That's about as oversold as you get. You can get to -20, but beyond -20 on HSI is mega extreme. It's rare. Rare sighting, and especially on a weekly chart, to have this -16 reading. That tells you extremely severe downtrend. You need weeks. You would have to wait. Let's say you had some kind of secret. You knew the euro was going to turn around for some reason. Based on these readings, not until you spend 2 or 3 weeks resolving this downtrend. Otherwise, you jump in trying to catch a knife. Here's look, RSI continues to just waver in the oversold. That's not going to change either. A lot of these markets are constrained by massive downtrends in, say, weekly RSI, or even the price, just even the price here. Okay, 2021, folks. Put it in the books already. It's October 13. Okay, but put it in the books as, you know, something like this. And this is, it doesn't matter what it is, what the downtrend is. Okay, everything's that's gotten sold is rolled into a dollar, sitting in a money market, and then other assets like euro dollar sell off like this until they can spend the months required to break above the downtrend line. You don't have anything. I mean, you got maybe some reactions here or there. I mean, sure, maybe we could react from 95 to 98 or 100 and then back down. But substantial moves that we're washing out that we'd want to be involved with at the moment, no. Here's an interesting one. This is Mexican peso. I think this is, a kind of a second tier currency to look at. Those Latin American, South American currencies haven't been hit as badly as, say, euro, yen, pound. This is pretty interesting. A lot of them did top out back in 2020 and just sideways. So this one, Brazilian real, of course, a personal favorite. Want to be watching these major patterns up here. Looking for, say, a retest up on some of these. Where can this top out? I find it interesting that these, second world, Latin American, South American countries aren't going through the roof like euro and yen. Just a side thought. I think it's because of the resource issue. But the currency market, I agree. And again, I know we have a lot of currency traders in here. If you folks want to look at certain currency pairs or are tracking them, let me know what you're looking at. I know there's exotic pairs, stuff like that, that actually can give you a lot of insight. Something like, say, euro, kiwi. I've always liked that one. I haven't looked at that in a while. There you go. Okay, a lot of big look at these long-term patterns too. Amazing. Euro kiwi up at 175 is a target too. Yeah, HSI starting to roll over. All right. Maybe we're getting close. I would like to see these register. I would like to see them give us something. All right, here's a great one. So euro kiwi, you got a couple patterns here. Deep crab and HSI all the way up at around 175. No check back. Really close. That's 175. I'll keep an eye on that. I know there's a few others that I probably should do a good workup on currencies next week, because you do have daily and weekly patterns in a lot of pairs like this that are hitting limits, kind of hitting zones, registering confirmation, and trying to do some kind of reaction reversal. Let's jump over to, speaking of reaction reversal, let's get into crypto. And this is all, look, crypto is the baby on the block. So it's getting its butt kicked because of the macro tech stock washout. There's probably a couple other tech stocks I should cover, but I want to get to crypto, and I'll circle back towards the end. We'll see if we get that sell set up in Nasdaq. I'll come back to that. Listen, Cardano. We talked about under 40 forever, and it flushed under 40 last night and flushed under to 35. Okay, it has a daily shark there. I was just showing you that, but that's not really what I'm getting at. I'm now absolutely just targeting the full retest reset, and you go back to your, let's get a better, something with more, there you go, more data. Until I get another bullish HSI set up or some kind of complex pattern reading, maybe we get a crab pattern or something that retests the lower lows. I think, Cardano has just been such a laggard not able to even print any kind of formation, retracement pattern, anything, where you're sitting right there at 36 cents is essentially the all-time 886, give or take a penny. There's nothing. I would have to see a something confirmed trigger here, and look at what your indicators are doing. This is why when we got this HSI bearish signal trigger after doing nothing from April until, what was that, until August, was concerning. And now we're, not only that we've broken down, but we've broken down under the 50 on this HSI. And every time we do that, that's where you get your acceleration. That's my concern with Cardano now. All right, one more candle down washes the whole thing away. And then if you're lucky, what you could get, maybe, not really a shark pattern, but crab pattern or something that gives you a 1618 down. That's about the only thing that could happen here. And it's, we haven't really done much with Cardano, just been watching this. It has been stabilizing for between 40 and 50 cents. But that's a dud. And it's with that failure in the last 3 days, it's now forget that range. And you just shoot the target lower for a 1618 sell-off. Something to capitulate this finally. But again, now that puts you to what, 25 cents? Most likely. Most likely. Here's the other one. Binance Coin. We're back down to that 382 level, 256. Did we hit that this morning? We sure did. We hit 256 this morning. Right back off of that. It's a 382 right there. Let's blow it up. So HSI is oversold now with that most recent move. The best thing to hope for is, again, for Binance Coin to hold that level. We've been talking about 256 specifically on Binance Coin as something to watch. If the larger crypto sector is going to break down, it's going to be from here. Haven't gotten that yet. HSI is oversold. That's fine, but it's meaningless until it comes out. Another, day or two? At least it bounced. I think it's lucky this thing bounced. But if we're here by Monday and this doesn't do much, let's just say this is an couple of inside bars for the next few days over the weekend, where you're not above 275 and you're not below 256. I would just think it's going to eventually grind lower, which a lot of them have been doing. Amazingly, Bitcoin, every time they try to sell it off 19,000, it's still holding. So you just want to wait on that one. There's a shark down here. Even if I was looking at that as a pattern, there's no confirmation yet. So sideways, okay. It almost tried to hit the hop level at 18,000. I find that amazing. I find the fact that Bitcoin, I said this on Tuesday, that it really is remarkable. Bitcoin has gone sideways, flat, holding at this 19,000 level, 19.4. There's a few big numbers there. But take a look. This could be, we do have historic precedent. We've seen that sideways action before. Let me get a better feed here. Yeah, Binance, good. So, and we could still go sideways, but I'm still waiting for the larger capitulation. That sideways movement reminds me of, let's go back here. Come on back. Yeah. Where'd it go? Hold on. Yeah, here we go. Let's go back to 2018. And I've just been scanning the chart. When's the last time we've seen such a sideways grind action? And you have to go back to essentially August, interestingly enough. Kind of matches up, 2018. Something like that. Trying to hold the 6,000 level. Yeah, you had a Gartley here. You had a pattern back in that larger level that just spent the better part of a year going sideways in the zone, but grinding lower until you had this kind of a factor where it just finally puked. And that seems to be, if we're going to get to the big targets, and that's Bitcoin 11,000, that's again the big 886, it probably is going to be something like that where we don't see progress. You just see a sideways grind, they hold it, and then finally there is a capitulation event. Go back here, sideways. Now you have a little shark. I've said this before, that shark, it's helpful. It's the first small little pattern inside the larger zone, but it also makes you tighten stops where that's an absolute limit between there and your hop level. That should not be violated. So on a day like today, call that a save. Call that could have been a lot worse for Bitcoin, where today could have been the day, and you almost did try to wash it out, where you would take out 18,000. Pretty significant stuff. And then you go to go to Ethereum, which I'm glad we're going to stick with the BAM scenario still, but Ethereum has 4 of the 5 legs. Let's go to this one. Where is it? There you go. So we do have this bat pattern, and today they did try to throw it down. They got it down to 1170, back 100 now, but we're trying to target that 886 on a smaller level. So here's what it looks like. There's your June lows, came up, rolled over, and the BAM scenario, the BAM trigger, again, already set up, went sideways there, finally got thrown down this morning, and then come back up. No problem. Just even with today's recovery, if you get a bearish close, it doesn't matter if today recovered. We will still target the 1,000 level for Ethereum before even considering anything. Ideally, you'd want to have the flush come very soon. Bitcoin flush, Ethereum flush. Do it now. Do it this month, and have the washout, even on the quarterly basis, that you can start this fresh next year. I mean, into next quarter of trying to make some kind of low this quarter. So, all right, could have been worse. Another one that could have been worse, Ethereum. I thought Ethereum did have a shot to go down to the $1,000 mark this morning. And I would still be looking for that kind of event. A big, it would be a 20% move if we could flush it down to 10 to 1,000 in one day and get that capitulation. Speaking of capitulation, before I get out of here today, I do want to take a quick look at the VIX, because it's not there. It's not where it needs to be. VIX is down actually 170 today. And remember, we had this bearish bat pattern. All right, that might cap it, where you might not get a spike in the VIX yet. Just be mindful of that. Maybe what could happen is we get a type 1 reaction where VIX comes off a little bit to 25 or 26 and then goes. Again, that's the whole do the type 1 reaction, and then when you do the return test, when you go to return, you blow it out on the failure. You get the breakout there. Keep an eye on that. But would love to see that go to 40 as well. As we said on Tuesday, look at your weekly time frame. Now, weekly's even better. I mean, that weekly shark. Now we have a reason. Think of it this way. We do have on the weekly, we have this bearish shark pattern. And it went to target 1, target 2. I think it's interesting that, look, there's HSI in August. And that was your first weekly bullish reading for volatility since that pattern completed. So that set off the return phase. And return phase, where you get a strong move back into the zone for this whole setup would be ideal. If it hit the hop at 40.79, call it 41, and then registered an HSI, that would fit ideally within the whole harmonic pattern framework, 2 of 2, and it would at least get to a minimum 40 level, as we have seen on so many prior historic market tops. Look at the bat pattern weekly. Amazing. It's tough to see that, to see where that could be a bat pattern because of all the gyration, just because of the way the volatility moves. But yeah, that is a pattern, and actually with that pattern, 42.64 is an important resistance level and has been. So that's not there yet either. Dow's up 630. Nasdaq's plus 130. Let's go back to Nasdaq really quick before we get out of here today. Let's do this. Next person to type in V3 will win a book. Anybody want a book? V3? If you haven't won a book yet, please let me know. Hey, Scott Barney, if that's your real name, sure, I'll look at Netflix. Let's look at Netflix really quick while someone puts up V3 to win a book. And then you know what you have to do. You have to go contact Miss Stephanie on the Discord. Go to Harmonic Trader. Again, there, basic members. Clint Corner, you win, Clint. Someone got to wake you guys up. Did you guys have coffee this morning? I did. Clint, you did. You won. So Clint, go to the basic members page and hit the link and contact Miss Stephanie. You need to send her your username. Your mailing address, please. Postal address. All right, really quick, folks, Netflix, before I get out of here. Market's rallying a little bit. Netflix is, remember, we're up here against the crab. Yes. Did we get to 212? We did, so check it out. Beautiful reaction, type 1 reaction, because we hit target 1 this morning at 212. No confirmation, but this has already set the motion the move back for the type 2. That's the first time we hit target 1. Vlad, sorry, Vlad, no, you were second, my friend. Sorry, I maybe you didn't see the chat, but I can show you my chat. Sorry, man. Vlad, contact Miss Stephanie. You want a book? You got a book, all right? You'll be the second winner. Don't want anybody disappointed here. Come on. I hear you, Evan. Right on. As it should be. Really quick, though. Netflix just doing the type 2 return. Reaction over. It's going to be another opportunity. Again, they're starting to bring it back. Let's go really quick to, let's go back to, here's one. Let's look at the Bitcoin futures chart. This is on the eSignal platform, by the way. A little bit different than TradingView. I think nicer for the larger patterns. Great for futures and options. Yes, somebody, Miss Stephanie, contact Vlad. Maybe it just came up, but yeah, on mine it showed that Vlad was second. But if you want a book, man, no problem. Let's go. Let's go. Let's go. Dow 675. This is not ideal harmonic action, and this is difficult. But until we can get some kind of obvious failure, that's still this deep crab, right? We can still say that that's holding. My at this juncture in the process, my concern is that with this kind of lagging inability to get above it and the declining peaks, at what point does that just get flushed like we've seen previously? Nothing there that is enticing to be to take the risk at this point yet. I'd rather see a larger development. I'd almost want to buy it above 25,000 than buy it at 19,000 just because this thing has languished so long. Yeah, maybe this is a spot where it could finally react. No. We talked about that back in June. Sorry, Vlad, I don't autograph it because they're drop shipped. Just make sure you send your address to Stephanie, and we'll take care of it. Anyway, keep your eye on that one. And someone was saying to look back to October. Oh, on the spot chart, you were saying go back to last October. There was prior resistance as a pivot point, as a prior pivot. Yeah, okay. This kind of thing going back to 2020. Or even, yeah, but the problem is like a lot of them that we've seen where they're going sideways, if they're not going to at least react in any way, that's not a great sign. Even if this was going to chop around, you would want to see individual rally of significance. 3,005. Send me a couple of $3,000 or $5,000 rallies off of the low on a couple of multiple tests. Then I would say there's actually something here. The fact that there's nothing responding off of this 19,000 level, impressive that is held so far, but not enough there for me to say, okay, there's something there. There's something responding. On the Binance chart. All right, where's the Binance chart? Hold on. What are you saying? You're saying, Kenneth is saying on the US Binance chart. Let me see that. From October 21, that wick. Yeah, that's that's looking at prior inflections. I hear you. Sure. I think what you're saying is back in here. But again, these are your prior wicks, and you're looking at prior pivots and congestion areas to act as potential support levels, but it's just not there. I mean, it's either 19 or 20 based on the very small action that has been generated at that level. There isn't a lot of prior action here at 20,000, but you sure are trying to firm it on Bitcoin at a kind of a halfway spot. And I will continue to say that this is all about the COVID range for just about every market. And so where are you? Have you hit the 886 yet on your COVID market? 886 is like 12,000 off the COVID low. And that's it. I mean, it's 18,000 or it's 11,000. Yeah, I hear that. I mean, again, it's in a larger sense as well. Psychologically, people are probably thinking it's either 20,000 or a shade under 20K, or it's 10K. There's not much in between. And I tend to agree with that, and with the stuff that's happened so far today. Hey, at least again, glad to see at least something responding on the markets, although it's another down day and you've rallied back. Crypto isn't moving. Macro is up huge. Dow's up over 1,000 off the lows, but crypto's not moving commensurate to that. So what's that tell you? This is kind of like a one-off event, maybe a one-off day event. Let's go over to Nasdaq quick. Wrap up for today. Here is looking for an opportunity. maybe to sell the rollover, or maybe to have this thing come back in before the close. Because Nasdaq is now plus 143. Dow's up 650. That might be the place to look for the opportunity. Your 5-minute chart, what do we have? Well, any check back on HSI? Not yet. Let's look at that 30-second chart. Again, looking at something like a 30-second chart, very helpful. Laser D, crypto wishes it was. Crypto wishes it had anything in its pipe to smoke right at this point. Crypto is as an asset class like cannabis have been. They look like there's an active, I think, an active movement against their development. I don't, it's difficult. We've seen cannabis stocks that were $60, $70 a share that are now $2. And that looks like an industry where you need to see bankruptcies. That's the next leg. Look, this thing breaks down, notwithstanding what's happening currently. This is the second leg down, Nasdaq, all of these that will take you into, say, next spring is where you see the bankruptcies, you see companies go under, you see layoffs, but you're not there yet. You're not there yet. You're still in, you're kind of entering disbelief phase, I think. Okay. So here's Nasdaq. All right, check it out. We had this crab pattern. Remember we talked about the crab pattern from here? We took a shot walking you through, looking for that move to 970. Okay, it took a while. Had that first move and then stopped out. And then a second move and a tertiary move. Those are tough, especially in a day like today, but you eventually got it. But here is the thing. You're now up to that 11,000 mark. You're at target 2. That should be the limit for this whole reaction. Even though target 1's the minimum, you get to target 2 and you can break your trend line, which you're trying to do. Then I'll start looking for a retest. You would look for the retest starting here because it hit target 1, but kept on grinding higher. So that could be your last shot. And essentially anywhere above this, like 11,010, somewhere in this range, that would be your exact check back. And also check this out. So let's say, remember I was saying about the 2-bar, looking for 2 extra candles. So we're looking for a check back. Where's the last check back? Here's HSI. All right, it registers, it checks back there, but it blasts on through. So as I said with the check back, if the check back bar doesn't agree with what's supposed to happen, like it's not a bearish candle, show me the next 2. Where's the second bearish candle? So there's one and there's the second one, and you wait for the close. And again, I'm not saying, I'm just using that as a larger technique to say, where does that happen? And also give it a few more bars for development. Sometimes it happens really tight. Other times maybe it's a little bit higher, like there. But it helps, again, to locate, especially with another pattern. We've got a pattern level at 11,000. But where, is it 11,000? Is it 10,990? Or is 11,010? S&P 500 is a triple peak lower high on the minute chart. Yeah, S&P is, look, S&P, we haven't looked at S&P futures today. And that's moving incredibly well. And that pays you. Okay, great one on S&P. So thank you, Laser D. I'll wrap up with this actually. Here's a great 5-minute HSI. All right, we just kissed it there at around 36.60. So let's say we don't have any other pattern here, but let's say we were looking for trying to target an area where HSI could help us say, all right, this is it for now. We should see it check back first, which it does. And then if it's going to be of something significant, all right, we should see at least 2 bearish candles before the thing really gets moving. So you're into this second 5-minute candle. Let's wait. Let's see what that happened, what that shows us. But again, this is the first step. You trigger it, you show the arrow. But for the larger move, it's kind of a delayed effect. Look, here's what happened this morning. Again, the 5-minute NQ is a great time frame for HSI. But there it is. You triggered it. You checked back one. All right, your second bearish candle did not come until all the way up there. But the fact that it took more than 1 bar, or you give it maybe a few bars within that zone to really show itself, I think, is maybe something that will help people from jumping the gun. I'm going to be doing a couple of videos on HSI, some things to be considering, to be looking at, that will help show what are the ones that pinpoint a more significant area, potential area than others. Oh, okay. Thanks, Costa. I'm glad to hear that. I think there are some things. I've been getting some good questions from people. And again, a quick shout out to all the new people. I've gotten several emails from people that are brand new. So welcome. And for everyone, look, the place to how to go about the harmonic pattern learning curve is to join us Monday, Tuesday, Thursday, 12 noon. Get over to the community on the Discord, which is here. And that all starts at harmonictrader.com. So become a basic member, get the software, and then sign up. So be aware of all of that. Here's a risk disclaimer, just so you know that. And then the other thing for the resources and the books, if you don't win a book or haven't won a book, you can get all the books as free downloads. And the volume 3, I think a lot of people asked me, several new people said, where should we start? Volume 3, because even though that has a lot of comprehensive information towards the back, a lot of the initial material, the foundation work has been abbreviated into the first chapter or so. So take a look at all of that, please. Let's get back to it. Keep an eye on that. Let's look at S&P. And, oh, where's the other chart? Let me bring up the other chart. And then finally, again, the 2 platforms we've been working with is TradingView. So everyone in here should access, at a minimum, the trial for TradingView and go through the patterns, go through everything that we've been doing, because our job is to respond to the levels. Look for the signals. Be patient. Like that technique I was saying with HSI, it's all about responding to those levels and, being patient with the price action. And it's been tough, no doubt, been really tough in this market this year, 2022, probably the most difficult, I think, since 2008 or 2002. Historically, we're getting there on that point where the damage is that bad. So be mindful that's the type of environment. But you get through these environments to get to the things like we had last year or the last few years. So take your time with all that material. Again, the software, the other question people have asked is they say, well, should I study first? No, I say get the software, because the software teaches you about the patterns. It shows you where the right patterns are, shows you automatically where the confirmation is, and then you can follow along as we do the various markets that we look at, things that are opportunities, things like the Microsoft situation example. Is that something where we should be looking at Microsoft or some of these other larger markets? Go back to there. Where's Microsoft? Here you go. Yeah, so Microsoft already 233.36. That's up 10 off of the 221 level that we were targeting. I'll give it a couple more days. I mean, plenty of time now that that retest has completed. Nice big candle. Great. That's a starting point. I still say you're well below the zone. Your 241 level is the top range of the zone. So, again, you're still technically in that zone. I'll go back to this here. And final note, I mean, listen, it's October, okay? October 13, historic October price action, all of that. So I don't want to get too caught up into yet another October washout. But if this whole scenario is going to play out where we're looking at the next swing trade, where we see some reaction off of here, that has to be the low. So your stop essentially is there at 221, and you now have to see a continuation reaction that gets definitely above 250 pretty quickly. But all of this still, and this is the problem that I have with all these markets that are still clearly under the downtrend that started from a year ago. And I think that's I'm going to leave it for today because we need to come back to this on Monday, and let's see what the follow through is with this. Yeah, nothing yet. You know, maybe Dow's up 700 now. Yeah, maybe they'll run it. Not bad, but I'm more concerned with the longer term follow through. So we'll look at that on Monday. Thanks everybody, appreciate it. We will hang in there. We will keep it going, no doubt. We'll come on back on Monday, 12 noon. And we'll see how we progress from here. Other than that, I'm saying, you know, if I was going to change my opinion that we're going to get a massive move off of these numbers, we get that follow through next week. And so probably some call options, maybe some end of the month call options. I'm going to look at that on Monday. Until then, go get them. Great one. Oh, so last person that puts in V3 wins that last book. Who's going to be the last person to win the V3? V3, Volume 3. And of course, you know who you have to do. And I have to call out your name too. Volume 3. I know we lost a few people. Andy G, you win the Volume 3. Thanks for hanging in all the way to the end. You have to contact Miss Stephanie on the Discord. Everyone else, we'll give away a few more books next Thursday. Again, come back on Monday. We'll see how it goes.